All right, Gareth, welcome to the WealthTech podcast. I am happy to have you on the show. Today I have Gareth Lewis, founder and co-CEO of Delio. Would you mind giving yourself a brief introduction?
Yeah, of course. Good to be here, and thanks for having me, Mark. Appreciate it. I'm Gareth Lewis. I'm founder and Co-Chief Executive here at Delio. I kind of cover a lot of I guess myself and my co-CEO have a bit of a natural front office, back office split to a degree. So a lot of my time spent out in the market, kind of identifying kind of strategic direction of the business, identifying and kind of build it up on our kind of key commercial relationships, strategic partnerships, and trying to drive that overall strategy of the business. We've been around for, nearly coming up to a decade now. So we've kind of seen a lot of moving parts in the industry. We've positioned ourselves to be quite, I think, fluid to how the industry evolves and develops. So maybe a little bit honest as a business. So we founded the business in Cardiff in South Wales, which is where I'm from. And the genesis of the business and what we are today have stayed pretty consistent. I think, we focus on trying to be the underlying plumbing, pipes, rails, picks and shovels that other financial firms can strengthen and enhance their alternative investment capabilities. So that's quite a broad remit and mandate. What it means in practice is we kind of are more of like an operating infrastructure layer rather than strictly a platform. We're agnostic across type of products on the system, type of firm that's using it, and also who they're kind of servicing from their customer base. But like real focus on the journey of Delio has been kind of commoditizing the technology workflows that you need for distribution, reporting, and client advisor experience when it comes to alternatives. So to power that, we've built out a white label operating system, lots of kind of configurable modules, workflows, and tools that can be delivered on a self-serve basis or customized and tailored in-house by the Delio team. So I think that's kind of the genesis of our offering to market. We're kind of very, very kind of focused on being unconflicted. So, we don't have our own marketplace offering. We're not trying to sell our own product or push distribution on our customers. We're really kind of working with them, understanding where they are in that digital transformation journey and alternatives, and then really mapping that Delio capability around their particular needs based on their objectives. So I think it's a pretty differentiated approach to say, a more traditional product focused offering or a SaaS perhaps point solution. We kind of really sit a layer deeper and leverage that as our kind of uniqueness. And there's a lot of kind of breadth and depth in that system now after having deployed a range of different types of use cases over the years and really spent a lot of time listening to the market and trying to build the tools and the plumbing that we think the industry needs, not just for now, but also for how the industry will evolve in the next 10 years.
Yeah, it's certainly been an interesting time. In the past 10 years, I've seen a lot of growth and innovation, a lot of growth with private markets in general, but also there's been a lot of innovation in that space. It's certainly one of my favorite topics to talk about. I think it's one of the big areas that for family offices in particular, there's finally solutions available to help kind of with some real major pain points, tackle that. What would you say makes Delio unique, and who's Delio's ideal client profile or profiles?
Yeah, I think it's an interesting one, but perhaps in some levels it's been never been an exact science in terms of who the right kind of partner for Delio is. Just in terms of a client particular segment, where we kind of sit at the intersection of the industry and review our kind of client verticals across the product distributors such as wealth management firms, multi-family offices, RIAs. We work with the product manufacturers themselves, so asset managers, GPs, and then that kind of third segment for us, which is kind of a direct kind of customer channel, but also kind of an indirect partnership channel in a way, is that kind of ecosystem of service providers. So that's the firms who are, looking to build out their own alts capability to service the market. So things like fund administration firms, exchanges, other software providers that are looking to kind of encompass alternatives into their go-to market. So there really is quite a vast customer segment for us. I think where we play really well is those kind of more mid-market to enterprise level relationships, or firms that are looking for that mid-market enterprise level technology experience. So kind of we play really well in things like firms that are kind of maybe looking to kind of standardize their operating system in the way that they may be working with multiple different product and service providers. They've maybe got some manual processes and point solutions embedded within different service lines, essentially. And they currently have a bit of a fragmented user client experience in the front end. So that Delio, kind of what we call the OS approach, is really designed to help firms own their client proposition. But, where the genesis of the business was from was really that kind of, how do you provide a better end client experience in alternatives? So whether that's via the advisor or the clients engaging with that firm's alternatives capability directly. So we've always kind of gone more, I would say, front to back along the infrastructure, rather than necessarily starting at the product and moving through, or working more from the back office and putting an investor portal on the front end. We try and really go above and beyond that. And when it comes to kind of client experience, either directly on the Delio user experience or integrated via API into an existing kind of overlay.
It's been over a decade. You obviously have a well-defined value prop now. We just talk about this operating system, this digitization of private markets. Why did you start Delio? Is that mission shifted over time? Talk to me a little bit about your founder's journey with starting the firm.
Yeah, so I think it was, I guess I probably came at it from a bit of a unique perspective as well. I wasn't coming at it from many years in the industry. It's fair to say I was 25 at the time. So I think it was kind of really looking at how things were being done and being quite curious and thinking about it from why is this it? Is there more to be done? And that initial kind of observation was really around what existing wealth management firms in the UK at the time had in terms of alternatives capability, and the limitations that they were facing from being able to do more for their customers in that regard. Yet it was I was working in corporate finance in M&A at the time, and the type of people I was selling businesses for, being involved in selling businesses for, they weren't your typical kind of wealth management client of 25 years ago. It was people from all different walks of life and backgrounds who have made their money through the private markets fundamentally, and lots of different industries, types of businesses, but they weren't necessarily, they were very entrepreneurial, very dynamic, and all those type of people typically enjoy engaging with product that they can touch, see, feel, understand, and relate to. So the initial kind of journey was from that experience in my brief past career, which led me to kind of thinking there must be a better way in exploring how Delio potentially play a role in that. I always say that I think the key strength I had at the time, it certainly wasn't kind of network relationships or capital, but it was kind of that blissful ignorance of how difficult it could be to go and build out what we were trying to build. There was no kind of, it didn't feel like a huge...
How hard the problem was.
Yeah, I didn't know how hard the problem was, didn't realize how big the risk was. And I think I look back on it as that probably being the actual underlying strength, and, that whole not being able to take no for an answer. And I think that's kind of then going at it from that perspective, which I think is quite different. I think how other films have approached our approach in the industry. I think it's just something we've tried to maintain at all times in the business in terms of trying to think about things a little bit differently. And I think at the time when we launched the business, I think really what I kind of refer to that first wave of alternative investment buzz to a degree was kind of really, let's just provide some access to products. We just need to kind of tick that box and move on. And, we were building a solution that wasn't touching the product, but I think we now kind of seeing in the last, even in the last 12 months now, a lot more firms are thinking about the actual rails and plumbing, because a lot of the infrastructure is currently sat as pretty legacy. It's kind of maybe firms being beholden to players in their value chain that doesn't give them the flexibility they might be looking for. And there's a renewed need for, I think there's a recognition across the industry that the shift is there, the inflows are available, they're there for the taking, the growth is happening in the industry, and you can't do that on point solutions, manual workflows and the like. So it's been interesting to kind of, feels like maybe we're a long hard to describe it as an overnight kind of success, but I think,
it does seem like the industry is finally kind of moving towards, you see how public markets behave, and there's lots of reasons for that in terms of the infrastructure that's in place, the standardization that's in place, the connections between the buyers and sellers, and for private markets to continue to expand, and for even investors to be able to participate in that huge segment of the economy, that there needs to be this kind of, basically an infrastructure play to be able to facilitate the growth in the market and just take care of these long-standing friction points. What advice would you give kind of a a younger entrepreneur entering the wealth tech space these days?
I think again, it's kind of, I think this goes, it's probably pretty obvious, but I think you kind of get that, you particularly when I was, in my early 20s as I was, it was kind of, or mid 20s at least. Again, there was there wasn't really that recognition of what a risk felt like. It just didn't feel like a risk at the time. And I think if you are kind of on that more like younger edge, I think that's a great mentality and a great kind of more freshness to bring to an industry like this. I think, if there's often, that perspective, I think is valuable. And you've seen some, great success stories, using that kind of blueprint and framework. I think that what I always say around business, I don't think anyone can prepare you for quite how difficult it's going to be. I think, a lot of people say to you, being an entrepreneur is hard, growing and building a business is hard, but I don't think there's anything or at least I've seen, that can ever prepare you for the actual magnitude of how difficult it is and can be, even when things kind of look good on the outside. So yeah, I think it's really developing a thick skin as well. I feel like, especially something that we've done when maybe the market has kind of taken time to move in the direction. You've got to be able to take a lot of setbacks and no's, but it's all really how you kind of how you respond to them and how do you take on board. I think sometimes we've done that well, sometimes we haven't done it very well in terms of learning from mistakes, but inevitable mistakes are inevitable. And I think it's I think different. There's a lot of considerations to how that journey will unfold for you. And it's not just kind of when you start the business and what you do, and it's almost the environment around you as well. There's differences to starting a business in Wales there is to starting in New York. That probably presents contrasting challenges in different ways,
So why did you start the business in Cardiff?
There's a number of reasons. I think a little bit of it was necessity. I was living up in Manchester and I moved back in with my parents and took out a loan. So it was kind of one of those true startup stories for that regard. So I think there was a little bit of necessity, and much to the displeasure of my parents, seeing me quit a stable and potentially prosperous career to come back and move in with them at 25 wasn't necessarily there, but they grew to appreciate it, I think. So that was certainly one factor. But I think for me, I also saw being based in Wales as an opportunity for us as a business, but also to do something impactful. I think Wales is an ecosystem. We've always, as a country, really, from an economic standpoint, we've always punched substantially below our weight. I think a lot of raw ingredients are there, but there's not many examples of what good looks like to build an ecosystem around, but also to learn from. So there's always been kind of an ambition in me to create something impactful. And I think to a degree we've done that. Certainly helped. And I also think there's a lot to be said for the quality of the people that you can find in Wales. I think, we've had some people with us from day one. And I think in terms of honesty, loyalty, trustworthiness, integrity, ability to be likable, those kind of soft skills, I think we've got in abundance in Wales. I think that.
Let's talk about the state of the private markets and private market infrastructure. Finally starting to see some mature solutions in the marketplace to address these, inefficiencies across alternative investment life cycle. Where would you say the market is today in terms of like digitization and having adoption and automation in place? I was going to say the baseball analogy, maybe that's not the best one in terms of what inning we're in, but where would you say we are? What is the state of the private markets in terms of infrastructure in your opinion?
Yeah, I think baseball analogies might go over my head, being given the relevance of baseball in the UK. But yeah, no, we are. I think it's a little. I like to describe it a little bit of everything, because I think you've kind of got that. That's wave one of buzz, as I mentioned, was kind of around access to product, and obviously you saw some of the well-established names really kind of build great success stories in the industry. And I think with that there was an undercurrent of what I'd class as point solutions emerging, things like subscription doc tools, and you can list them all out. So I think you kind of had that first wave of there, but then I think people forget that there were still other solutions in the market that were delivering private markets technology even before the noise was particularly loud. So you kind of then, I think, coming off the back of that, you've probably got that combination of legacy system, point solution, and marketplace solutions. And it's really now, I think the second wave is how that translates into an infrastructure. I don't necessarily believe it will be a centralized infrastructure where one provider plays the well, I think it's
When
a
you say
decent.
infrastructure, you're talking it's product agnostic. Is that the kind of one of the key attributes when you're
I
talking
think I think infrastructure, plumbing. I think the real kind of joining the dots and bridging the gaps, and I think we're still a long way away from that. I think like my observations quite. I think there's still a lot of. I think a lot of this is on the providers in the market as well. And, all of us in terms of there's a lot of kind of yes that my system does this, it does everything you want. Does it do this? Yes, 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 yes. And there's very quite often when you lift of the lift the bonnet, I guess, and lift the hood up, it's a little bit different. So I still think there's a lot of kind of digital front ends with a lot of manual processes behind the scenes that even needs to evolve. So I still think in terms of that digitization, we're really very early on in the journey, and I think it's an interesting storm in the way that you've got that combination of those point solutions and product focused firms looking to come in and try and solve the infrastructure piece themselves. You've then got that other end of the spectrum where you've got really large established firms that don't necessarily have much of a presence in the alternative space now looking to find ways to move in and deliver solutions as well. And then you've got those kind of native, particularly with the emergence of AI, you've got these kind of native firms, I guess like a Delio to agree with an infrastructure messaging as our core and as our DNA of the business. So it kind of then speaks to me as if like the future for, digitizing alternatives is almost that decentralized infrastructure. It's a focus on kind of configurability and flexibility, and there'll be lots of firms doing things in different ways, but that doesn't necessarily mean that you can't drive standardization. I think it just might be a bit of a wavy road to get there with a number of phases and steps in that journey. But I think there's just, when I speak to kind of prospects and strategic partners, I say I've got more conviction in the opportunity than ever. I think even after a decade, I still think there's a lot of problems that need to be solved that the existing landscape hasn't kind of yet cracked. And I think if you can do that, I think that will really, and I think there's a lot of opportunities for a lot of different types of firms to win in that. I don't think it's going to be a winner takes all kind of market.
So not exactly the attacking third of the pitch, but maybe you're heading into the neutral third of the pitch.
Yeah. There's a long way to go.
How have GPs reacted to your solution, or where do you see GPs helping to solve the problems that exist, and where are they still causing the problems?
Yeah, I think that recent times in particular, I think you're seeing a lot more GPs thinking about digital experience more so than perhaps before. And they're looking at that in kind of two ways. They're maybe going back to their existing provider ecosystem, whereas fund admins were providing them some sort of document repository. And that was kind of fine when they were working with a smaller subsection of LPs. They're now kind of saying, hang on, that's not good enough. As we expand into the more wealth channel, we have larger volumes of investors. Similarly for them, that kind of builds out then an operating system challenge where you've probably got different products using different solutions, different providers, probably that whole manual workflow combined with point solution piece emerging. It's how do you really shift that into a unified, consistent operating system that gives you that single source of truth, but also gives you that consistent client experience that can then be personalized depending on who the customer segment is. So I think that message and that thinking is starting to happen a lot more in the GP space. And then I guess it's a decision which will be impacted by who they're currently working with and the size of firm around do they stay reliant on their service providers to drive their digital agenda, or do they look to try and bring that in-house and deliver it themselves? And then you've got that whole, do we build something? Do we buy something? Do we plug together lots of different solutions? Do we buy something? Do we invest in something? Do we build a incubator to build out a load of systems? We've kind of seen it, all different kind of strategies for doing that. But I certainly think now that GPs are really thinking a lot more about it. And I still think there's a lot of gaps to be filled with how that then GP connects into their different customer channels, because you've probably got some kind of, there's probably going to be more, I think, GPs, working with those wealth clients directly. But then how does that affect how they are able to build relationships with that wealth management channel? You're seeing those GPs circumvent your traditional marketplace solutions to drive lower fee, to get better value and improve margin. There's a load of trends which all point to them needing the pipes and plumbing. And it's kind of that, we kind of call it the OS approach in Delio, where it's kind of single product source, i.e. then to multiple customer segments, you need an operating system to manage that. On the distributor side, it's the opposite. We probably have multiple product sources and a single client channel, which is your own client channel. So there's a lot, I think actually the needs of the market are converging from a workflow perspective.
What are some of the challenges and biggest hurdles that on the LP side, the wealth management side, face when trying to bring private investments to their clients, and how can they better utilize technology to help overcome some of these friction points?
Yeah, I think we've got a bit of a different search on that, because I think a lot of the market tends to talk a lot about education and the like, and I think that does play a role. That's just, there is no getting away from that. But I think what we've seen is actually a lot of kind of what's being provided to the wealth manager almost stops at providing them the product or trying to provide them the product. So with that whole channel from product landing with wealth management firm to then the client being able to engage in that product is kind of being left for the wealth managers to figure out themselves. And perhaps if they have a single relationship with one product provider or one third-party platform, they might then be able to leverage some of their workflow tools to do that. But then that leaves them a little bit kind of tied and with a lack of flexibility to kind of own and control their proposition. So to me, the key challenge on the wealth management side is pipes, plumbing, and being able to own and control their proposition. I think in the same way that GP are thinking about, about end user experience, I think the wealth management firms are starting to look at it or thinking about looking at it particularly when it comes to how do they differentiate their alternatives capability versus their competitors. How do they personalize the offering to the client? And a lot of that comes from having those technology rails in place, because then that also enables you to personalize education, enables you to personalize what data you're showing these types of clients as well. So I think it's a plumbing and a rails challenge. And I think it's difficult to solve, be the product and be the rails for these types of firms. So I think there's, again, a combination of answers to that question. And some of it might be build something yourself in the wealth management firms. Some of it might be engage with a vendor. Well, there's a number of ways to solve that. But I still think there's a lot of plumbing, particularly if those wealth management firms are thinking about or looking to go into embedding alts within retirement accounts, whether they're thinking about going into the retail channel more broadly with a sort of kind of, cutting edge kind of digital client experience like you see in the Robinhoods of the world and stuff like that, deliver how the kind of some of those traditional wealth management firms replicate or provide something in terms of that could be equivalent from a competitive standpoint, particularly when you've got this new generation of wealth creators coming through and that talk around the big generational wealth transfer. So lots of problems that you can probably summarize into pipes and plumbing and what I'm seeing.
Future private markets, obviously a lot of growth, a lot of expansion and alternatives. Family offices have always been kind of chock full of them. But even still, data indicates that they're looking to still increase their exposure to alternatives. And then you're starting to see, in the US side, the RE market, the advisor market, looking to increase their exposure, client exposure to it. Obviously, I think their tolerance for some of the inefficiencies within the market are a lot less than a family office would put up with. What does the future hold for private markets? When do we get into the attacking third of the pitch, and what's the what needs to get done to get us there? Tell me, 3-5 years out, where are we with the state of the industry?
I think kind of digitization behind the curtains is probably the first one. So it's kind of talking. I was thinking this market was very kind of style and substance. And I think when that style translates into substance, I think is kind of the first piece, because then that means you've kind of truly got the rails to kind of deliver on the growth trajectory of the industry, I think. So I think that's kind of very much what I kind of refer to as like true digitization. Once that kind of happens, I think there's a lot of work and projects and heavy lifting that needs to go on across the industry and the ecosystem. I think standardizing that operating system into standardized connectivity is an interesting one. I think the ability for data and products to be shared across firms in the market, irrespective of what they're running on and how they're running, I think will be an
Are you talking
opportunity.
about like unique identifiers, those type of things?
I think so. And there's a couple of firms that, obviously kind of tackling those challenges and problems. So I don't necessarily think it's like the standardization of information, because I think standardization of information can be accommodated in this day and age. And, from perspective of AI, so different firms will be doing it in different ways. But I think that whole interoperability between different players in the ecosystem, as I said, I don't think it's a centralized infrastructure. I believe in like the future being quite decentralized, just because of the scale and the volume. The scale, you've got so many players that will be looking at or need to play a role in it just because of the size of their organizations. Plus, you've got that wave of emerging firms kind of up and coming and looking at partnering and collaboration. So I think there needs to be, more focus around, that broader ecosystem connectivity at the smaller end of the market, the smaller to mid-sized firms that are doing really interesting things in the space or have done, and maybe kind of looking for what's next. I think there's some consolidation of the service provider and the provider ecosystem that will happen and make sense to happen in terms of creating less subscale solutions to the industry. I think that will kind of really help with interoperability and true digitization as well, if you go back to those two trends, because I think a lot of that can be solved by firms in the ecosystem working together more cohesively. I think the other really interesting one I was looking at as well is kind of cost to access the products. And I think there's a lot of margin compression of cost pressures to come, particularly as firms are looking to use it maybe as a means to differentiate and stand out. You kind of think there's some solutions and some work to be done. And again, for those firms that are embracing true digitization and cohesion, that should be easy to deliver to the end customer if done correctly. So I think that also will create a bit of a shakeout in the market as well. So they're kind of what I see happening in the next kind of 3 to 5 years. And it's never a dull moment, right? So
I mean, you do see a lot of innovation. I think you see a lot of growth in the marketplace in terms of distribution channels, broader channels.
Mm-hmm.
I mean, I think we're talking even about accessing the 401k. So even getting down to a retail level, obviously you still got to get through the kind of that advisory channel first. I think the custodians in the US side, have a role to play in that. And right now that experience is pretty poor. I think data and transparency is going to be another key aspect of it, and being able to get greater transparency. It's been so hard, just that first mile data aggregation for these investments, just at a fund or an LP level, has been difficult. But then to be able to get operating company level transparency has been tough. Talk to me about data and transparency. Why is data so important, and why do we see things getting easier for LPs to be able to get greater transparency in private markets?
It's a real tangible problem that most people in an organization can see and feel the pain of. So I think when it comes to like, when you're looking at building a business that's maybe focused on a particular point in a value chain, it totally makes sense to deliver a solution for that. And obviously the advancements of technology to enable that. Again, it's a balance between the commoditization of those sorts of technologies and how your business evolves from there. But you've certainly seen some great solutions kind of coming to market to really tackle those challenges and seeing good growth. And it's a real tangible problem. You can put a number to it, you can put a cost to it, you can put pain points to it. So delivering ROI is it can be pretty binary in that regard. So certainly I think that is being solved really well. And so you're seeing providers really focused on that. But you're also seeing firms try and build and replicate that capability in-house because of the advancements in technology as a whole. So I think one of the things around that can obviously, I think transparency to me in terms of how that data is presented and how that user experience evolves to provide that access to data in a way that's seamless and not reliant on lots of steps in the chain and manual process to bring that together. So we think about that a lot when it comes to how we built out our kind of post-investment reporting module, kind of working with clients to really focus on ease of getting data in, that flexibility in the middle when it comes to calculations. Different firms have different nuances that need to be accounted for, and then how that's visualized downstream. I think is a long, goes a long way for transparency. But I think for what we've always saw as an interesting opportunity in data, like a lot of benchmarking and industry data is kind of relying on what's happened in the past, and with it being a liquid market, that past can be quite a long tail behind it. Yeah. So I've always thought around how providing a better advisor client experience could help generate better data points around investor sentiment and things like that. So we've got some, interesting things in development and design at the moment around really trying to get more data to be fed back into, but a different source of data. That's kind of where I see our rolling it, everything from, dummy deals, which one do you prefer, those kind of gamification of trying to capture further insights to really try and, enhance the data that can be collated for a firm to make better decisions in terms of what their clients might want to see or what their clients might want to do in terms of the odds proposition.
I think obviously one of the big areas that have helped with that is around AI. AI has been great to be able to unlock unstructured information, which most of it in the private markets is unstructured, locked in some sort of document, or it's historically been locked in a document. How has Delio leveraged AI, and what do you see the impact of AI being on the industry in general?
How I've looked at it from our technology system perspective is we've got the workflow end to end. You've got that ability to deliver configurable workflows. You've got that ability to kind of manage a lot of your alternative business on our system. So then we kind of look at it, well, what are the quick wins that we can deliver to our customers from with AI that can save time, make them more efficient? So that's kind of been the first phase. So things like, rather than uploading keying in a product to add into the system for distribution, and you upload a PPM and also populate that. Same goes for subscription documents. Already they're kind of massive time savers when you're utilizing system en masse. And so then we're kind of first wave is really around those quick wins. And then it's more around then how can you leverage that activity on the platform to make smarter decisions around what you do next and how you do it. So then looking at kind of, okay, this client hasn't signed their NDA, they haven't downloaded the capital call, right? Okay, let's get an automated notification. So when I log into my system, I've got a task list of who's done what. This client's looked at this product 8 times, probably need to follow up with them. Those kind of actions internally, and really kind of actually, when you've got such a large system like we do as well, I think there's a lot to be said for actually helping with user navigation, because there's a lot of configurations on off switches. So us putting together a help center guide is very difficult because not one platform looks the same. So it's how do you then help address that? So we're looking at kind of redesign our knowledge center at the moment, overlaying it with some platform by platform, white label by white label platform context that then can develop a tailored help center and knowledge base to help our clients maximize the value out of the system. And on the next wave after that is really how then we drive that advisors and then clients able to interact with what they're seeing in their client experience. So if they're seeing insights and news from their firm, how do they engage with that, ask questions, better understand? How can we better help them to go through the transaction process, better understand the subscription documents to reduce error, to reduce drop-offs, and then look at their reporting data and better understand it? Or it could just be as simple as a command that just takes them straight to the post-investment the capture call that they're looking for that you can then take away and act. So multiple steps on there, something around the investor data sentiment as well. And then looking at other firms that we can kind of partner with really to help us with that data opportunity that we see. At the moment, it's kind of there's some great stuff in the private company secondaries data side, for example. There's probably multiple data firms that we probably want to partner with in our journey. So it's how do we do that in a way that's efficient? I think AI will be able to help us with that massively. So we're not too much in a pain of a partner as well, with some of the firms would like to work with in an ideal scenario.
Yeah, I mean, there's so many areas and room that AI can improve upon, even just obviously way beyond the data aggregation component of it to agentic AI and send up these workflows that can automatically execute these tasks and then follow up on activities to the user experience to being natural language, not necessarily knowing how to navigate a system, not needing to know how to navigate a system, not needing to know how to write a report, just asking for the information that you want in a way that you want it and getting that information back. Like you say, prompt is the new language that everybody needs to kind of master going forward. But it is certainly, you can see that being able to unlock a lot of activity and improve that user experience quite a bit. Other kind of tech trends are you seeing in the industry?
I think that's just more kind of a lot. I think it's an interesting one in terms of how customers want to engage with a proposition. That's still something that we wrestle with internally in terms of, is it delivered via a native white label? Is it delivered via a mobile app? What's the pros and cons? We regularly get customer feedback, or we'd love to be able to notify more in Europe than the US, to be fair. But, we want to be able to engage with clients over WhatsApp. Is that compliant? You might think it's a good idea. It improves engagement. It's how a customer wants to interact in many territories. But then there's a whole undercurrent of then complexity from an organizational infosec standpoint and things like that. So I still think there's a lot of technology trends around how users will engage with platforms and operating systems and systems in the future. And we're really trying to think hard to make sure we're on the right side of that rather than the wrong side. I think as well, obviously, I think there's a lot more. It's interesting around the whole use of tokenization. There's a lot of momentum in terms of articles and POCs around how that industry is evolving, but we're starting to see a lot of that be applied now in real use cases. Now we've taken a pretty agnostic approach to that, way effectively something like a tokenization engine can be integrated into the Delio sitting as a workflow name. We've got a couple of projects where clients are doing that already. I've always thought more of it around like what that means to the ongoing administration of private assets post-trade, in terms of, asset transfers and redemptions and secondary trading and things like that. So I certainly think there's probably a journey that's going on into becoming more kind of mainstream use case. I still think it's that balancing act between does the customer need to have an interest in that for that to be the right solution, or is it the right solution anyway? It's still kind of something that needs to be figured out. And I've seen, any firms try comparing the two. So I'd say that's quite a big one, actually, which leads into kind of some of the other kind of post-investment activities around liquidity, so secondary trading, lending against private markets holdings. We're seeing some interesting developments on that side as well.
Interesting. I think it is. I think it's an interesting comment, trying to meet the users where they want to be, but to be able to do it in a compliant manner can be certainly a challenge, whether it's WhatsApp or they like text here in the States, and there's obviously compliance requirements on both sides.
And I think as well, it really depends on that shift of how seamless is the interoperability between public and private. I think a lot of the providers that have obviously well entrenched within those other asset classes, as they move into alternatives, how they go about executing that, I think will play a role in answering that question and unfolding the story as well, because you've got a lot of real estate, an advisor, for example, already well established and well entrenched. So if they can get that whole alternative strategy right, that's a substantial growth opportunity for them. So they're incentivized to do it. It'll be interesting to see how well that execution goes as well.
Well, Gareth, this has been great. I love to end the podcast with 3 questions that have nothing to do with wealth tech. You're from Cardiff. What is something that people in the States might not know about Cardiff and Wales in general?
Yeah, I think actually do you know what? I think that Welcome to Wrexham documentary has done a lot for people's knowledge on Wales. I've kind of seen the transition even in the last couple of years since that's come out, in terms of explaining the soccer pyramid system that some of the Welsh clubs play in, which is the English one. We've also got our own league there. But I'll probably say something that often surprises people, particularly when clients and prospects are talking about coming to Wales. It's only 2 hours on the train from London. I think people, with it being a separate country, people actually expect it to be a flight away. And I wouldn't, there's not many flights that go directly into Cardiff, unfortunately. It's something I'd love to see improve. But the accessibility is a lot easier than people give it credit for. So that's probably my main one. We've also got apparently one of the top 10 best beaches in the world, actually in West Wales, near where my dad's from, on the Gower in Swansea. So that also tends to surprise people. Unfortunately, we don't necessarily have the tropical climate to accompany it, but we do actually have the picturesque views and everything like that on the water. So,
well, I do love the football and the relegation. I love that concept. I'm a big EPL fan, but I think you could bring it to the States. Like baseball can really use it.
Yeah.
Football, like can we relegate the Jets? You'd probably.
I've always had a bit of rather than it kind of being tanking to get the first draft pick. It changes the perspective in the latter stage of the season when you're kind of fighting for a lot, and the financial state, particularly when you're going down from Premier League to Championship and vice versa, they say that promotion playoff finals from the Championship to the Premier League is probably the richest game in sport.
Yeah, no, U.S. owners would never put up with that. So,
Yeah.
But yeah, it would be great for sport. I love the whole concept. So you're currently in New York City. What did you find like really kind of shocking about living in New York City in the States that you really weren't expecting? And then what do you end up loving about the city?
I think I wasn't. I mean, it always amazes me the price difference in rents versus Wales. But I think I mean, obviously, I spent some, sort of lived in London, lived all over, and I mean, it's way beyond London even on pricing, which surprised me because I think in a lot of other things it's pretty kind of comparable. So that was a bit of a
World
shock.
class, that kind of
Yeah, I think that was a little shock to the system, particularly when looking at it versus my place in Cardiff and the relative of what you get bang for your buck. But no, I think in terms of what big thing for me that's been a shock, I think there's just a massive difference in kind of magnitude of opportunity here when building a business versus in transparent in the UK. I think there's just a lot to be said for the size and scale and breadth of the market and the sophistication and also the people. And I think that, really centers on New York. I love the energy. I love the fact that you can pretty much step outside your door on an evening, go for a drink with a contact or a colleague, and you're going to meet someone super interesting with, really well, probably an incredible network, and it's lots of interesting conversation. I just tend to love the energy. I feel like, a day pound in the streets of New York, I feel pretty revitalized and energized and that side of things. So I've got a lot of enjoyment out of being here, particularly over. I've been back and forwards for a number of years now, but now kind of focusing my energy and time here, which has been great, And I think also going back to the soccer, you get more time to watch you get better coverage over here than you do in the UK. Actually, it's actually a more friendly time where your partner maybe hasn't made lots of plans for your day that you can watch it at 7 a.m. in the morning before you're.
I think NBC does a great job with the Premier League too. I think their coverage of it is great.
Yeah, it is.
I think New York City, if you can make it in New York City, you can make it anywhere, right? Like it's really, there is an energy in New York City that you like a buzz. I like to say, I love going to New York City, but on the flip side, I love leaving New York City too. After a while, you're like, okay, that train.
It was a lot going on. But I think everyone, again, I found everyone to be super accommodation and welcoming and keen to help as well, which I don't necessarily think you always have that association with people in big cities. But, when you get to know people and build relations.
Then they get the reputation from.
I agree with that 100%.
Their own custodians are out there. But it's really a good tech hub too. I mean, it's really kind of I think maybe it hasn't shifted, but it certainly has grown quite a bit in terms of innovation, the tech, entrepreneurial technology innovation coming out of New York City in particular. Yeah. You see it in a family wealth space. I mean, it is the epicenter for family offices in the States, and the States is the largest family office market. Now you're seeing a lot of innovation coming out of New York City for family office and wealth tech. So it's really great to see. Is there a recent book that you're reading that you'd like to share with the audience?
Recent book. So just actually, I'm one of these by the end of my day, I'm so brain drained that absorbing information tends to sometimes depends on the day, but it can be a bit of a challenge. But I have recently finished. I don't usually take recommendations and read them. I like to just pick up a random book and read it rather than necessarily read the list that you might get online. So, but I did read Gap Selling, which was kind of, just like really interesting in terms of perspective and ways to think about it. I always struggle to kind of contextualize those sorts of kind of, I guess, methodologies and theories to the alternative space, because I really do feel it's a space built on relationships and rapport, and the nuances of individual firms in every sale is kind of a discussion. Commercial discussion tends to grow arms and legs and go in different directions from what I've seen. But I think I always go back to Black Swan by Nicholas Taleb. I always find that to be probably my number one in terms of reference material, particularly when you see the ups and downs of, say, the private markets in the last few years. And I was in COVID and things like that, and just in terms of this encouragement of predictability from investors and things for forecasting the like. It's not always it's not always easy to easy to accommodate. Often hard to predict particularly with odds. I think it's very difficult what's going to happen in what 2 years time looks like, let alone 5-10 years from a modeling perspective. But I think it's important to embrace that. And so that's always a good read for me.
All right, Gareth, this is great. I really appreciate you being on the show.
Thanks for having me. Appreciate it. Thanks for the time.